You're listening to the Accelerator Network Show.
Hello, everyone. Welcome to the Accelerator Network, the live show where we bring you the current economic news and more. Today, we're going to be talking about the Bitcoin halving and the Hashrate situation. So let's get into it. The Bitcoin halving dumped today, and this is why Hashrate will drop. And I'm not talking about a dump in price. I'm talking about a dump in Hashrate, which typically will result in a falling of price because Bitcoin's proposition is security, and as the security drops on the network, the hash rate goes down, and that is what causes the security to go away, meaning that Bitcoin is worth less than it was before. So you see that in the first halving, Bitcoin's hash rate was 28 terahash a second. And right after the first halving event occurred, there was just a brief lull in hash rate. It just didn't move up or down. It just kind of continued. And then as the price continued up, so did the Bitcoin hash rate, or it could be the Bitcoin hash rate went up first and then the price followed it. And then the second Bitcoin halving, the same thing happened where the hash rate just stayed the same and it just kind of barely moved up. And then as the price kind of stabilized, it started to move up as well. And so this third hash rate, I think we're going to see something completely different. Bitcoin's hash rate is now at 120 million terahashes a second, and you see that there was a brief price fall here, which caused the hash rate to fall as well, and then the hash rate rebounded. But I think this was the first of a larger fall that's coming. And the reason why is because Bitcoin has just never been tested through the end of a business cycle. And as this business cycle comes to an end, Bitcoin will really be tested because people that need cash and cash flow and money will be selling their Bitcoin to get that. Will this break Bitcoin? Absolutely not. Bitcoin is not going away. The free market will determine the Bitcoin hash rate, and as more miners fall off the network, it becomes more profitable to mine. So whether you have older hardware or newer hardware, it's going to be easy to mine as the hash rate goes lower. Now, what's happening is a lot of the miners on the Bitcoin network are mining on old generation 16 nanometer equipment. And if you're a new miner, you probably have some new equipment. You're running at 7 nanometers. But most of the equipment out there, probably about 20% of the network running right now, which is a majority of the data centers, even though it's only 20% of the hash rate, it's still a majority of the data centers. And the reason why is because these equipment that are running the 16 nanometer equipment are just so much slower than the new stuff that's coming out. They're about a third slower, and they draw about a third more power. So this equipment, the 16 nanometer equipment, is just going to have to be powered off immediately because the break-even point after the halving happens is $9,000, and that is running on really inexpensive power. I mean, 2 cents a kilowatt. Very, very inexpensive, almost subsidized power, stuff that you would only find in certain places of Russia and China and in the U.S. in certain areas. But this equipment will have to come down, and that's just going to cause the hash rate to fall. And it's not going to cause a death spiral because there already is new equipment that is twice as profitable. The break-even point on those, the newer 7 nanometer equipment is probably more around the $4,000 range. So the interesting thing that's happening right now is there really isn't much interest in Bitcoin. If you look back, you'll see right before the last explosion in price, there was about a factor of 21 in interest on Bitcoin. And currently, in current day, there's only a factor of 11 interest in Bitcoin. And the other really interesting thing is that if you compare this to, a weird term like electronic cigarette, there's actually more interest in that than Bitcoin right now. Over time, over the last 12 months, there's been more interest in electronic cigarettes over Bitcoin. And you think, cigarettes are probably, still pretty popular despite the health effects, the negative health effects. But electronic cigarettes are even a smaller portion of that interest. And even now, Bitcoin is still less of an interest than that particular search term. And you can look through many different search terms and you'll see the same thing. So Bitcoin is still really in its infancy right now. So being challenged during this end of the business cycle is just going to be it's going to be a tough time. It's not going to be easy. And I think the hash rate will show this ultimately. So let's get into the quick daily news today. It's May 11th. Happy Monday, everyone. Oil production is being cut again, 1 million barrels as of today in Saudi Arabia. States are starting to reopen, and oil consumption has probably hit its all-time low at this point. So it can only go up from here as states start to reopen. People are going to be filling up their cars with gas, using more oil, and things will restabilize. Another interesting story is Tesla and Elon Musk are fighting with California over opening. Ultimately, he's probably going to end up moving his operations out of California as a result of this. He's already said that he's ready to move to Nevada or Texas because this whole situation has soured him. California really does not want him to reopen, and he's been fighting with them. There's been a lawsuit over this, and he just says he's had enough, and he's probably going to be moving out of California. And I don't blame him. California is an extremely expensive place to put cars together. Even if they're futuristic cars, they probably should be putting them together somewhere where it's a little bit cheaper to do that, and there's more space, and the real estate is less expensive. The next thing on the list is malls are really struggling with tenants paying rent. Coach and Kate Spade are reporting that they are not paying rent. And this is interesting because these are higher-end retailers, and even the higher-end retailers are being the ones that are hit first. They've just decided to stop paying their rent, and I think we're going to see this through a lot more mall-based retailers, and that's just definitely not something that's a good area right now. Malls are being hit really hard, and the retailers are pretty much seeing no traffic even after the states are reopening. Working from home is taking off. Lots of technology companies are saying that they will not need to reopen their offices until the end of summer or until January 2021, which is, that's a really far way out. If work from home really works, a lot of these companies will be moving from major cities where prices are high. Why have your workers all in the same area, like in New York or Seattle or San Francisco, when you can just move those people out to rural areas? Yeah, they'll be spread out, but with the power of the internet, they're all going to be connected and working together. So this is an interesting experiment, and if it works out, I think there's going to be a mass exodus from these expensive places to live, these coastal regions that cost expensive, very high prices for businesses to operate. And they'll be moving into more rural areas and spreading their workers out, and they'll reap the benefits of that. Carnival Cruise Lines is upgraded by HSBC, which just blows my mind. I guess bookings are surging for cruises right now. People think they're going to be able to get right back on cruises, and this virus is just going to go away. Maybe they're right. I don't know about that. Amazon is interested in purchasing AMC theaters. This is probably a real estate play. I suspect that they are going to buy up these theaters and turn them into warehouses. They're located right next to where people are located, and they have huge parking lots. They can store all their factory workers and turn the theaters into warehouses. They're pretty much just large warehouses all ready to go for Amazon. I doubt they're buying AMC theaters to do their own movies, do Prime Video in movie theaters. I doubt that's what this is. This is probably a real estate play. And last thing today is the Redfin CEO, Glenn Kelman, says that Airbnb properties in beach communities are, quote, toast. Right now, they're almost likely in forbearance, which is a process that could last up to 12 months. But once that's up, there will be a wave of listings from these coastal communities. These beach properties, there was a big boom in Airbnb. People were buying up these properties and seeing the money flow in as people wanted to rent these houses along the beach. And I myself have rented a house on a beach and really enjoyed it. But you know what? It's not really worth it anymore. And I think these people are going to see that having a house is actually a liability instead of an asset when it comes to Airbnb. Today there's a virtual Money Show event. It's Monday, goes till Wednesday. I encourage you to check it out. You can go to themoneyshow.com. It's a free event. I'm not getting paid to promote this. I just thought you'd check it out. It's something they normally do in person. They have an exhibit hall and speakers, and it's just been moved all online because of the situation. So I encourage you to check it out. You can go over to moneyshow.com and fill out the information there and get access to that and start live streaming the live events. There's some free prizes on there as well. It's just a really cool event. It's pretty novel. It's something that they've never done before, and I highly encourage you to check it out. Thanks everyone for stopping by. If you found this information useful, please like and subscribe and post a comment below, and I'll see you in the next episode.